I thought it was very interesting. He said, just listen, you need to find something with its own story to trade. Speaking of which, something with its own story.
Speaking of which,
oh my goodness, this week on oil. Hello. Let's just have a little look on a chart on oil. Did you know, Jeffrey? Did you know?
Not sure.
That oil saw its most volatile market since Saddam Hussein invaded Kuwait in
I didn't know that, but that's very interesting, is it not?
Very
and
interesting.
Topical.
Similar theme. You might see a bit of
you might say
a bit of
that.
a pattern here. But have a look at the size of the daily bar chart. Daily bars on this chart, would you? It's just horrendous. We had nearly an entire month of February of consolidation, and as you can see right towards the end here, and I'll just pull it down onto the 4-hourly chart on the left-hand side there, that is Putin's invasion of Ukraine, that is Biden's response, and then we just sort of teeter-tottered backwards and forwards. But the things that have happened this week on oil are quite incredulous. We've had the threat of Russian oil not being banned from the oil market. So there was actually people refusing to bid on oil market. We've had, on top of, as a bit of a side dressing, we've had riots in Libya that has also threatened civil unrest there as well. So there are a few other things happening other than the Russian-Ukraine tension story. Libya has had huge unrest. If that proceeds to a civil war, we're going to see oil closer to 120 in a blink, by the way. So we do have these other things happening. We've also, there was an OPEC plus meeting in Vienna during the week regarding the increase in production. Now, we've been talking about that on and off since about August last year, where they were talking about doing this lovely, after doing a massive cut, gentle increase in productions. Now, this meeting, speaking of setting records and all the rest of it, it was one of the shortest, briefest meetings ever recorded. It went for 9 minutes. They all decided, OPEC Plus decided that it was going to be a really good idea, regardless of current events, to just increase, as they had agreed to, increase production of the 400,000 barrels a day as per last year. So it seemingly took into, or, you know, if you're looking at the true agenda, they were definitely looking at what was happening, but had no intention of increasing production to take the heat out of this market at all. All that warranted was a couple of threats from President Biden and a few other countries that they would have a staged release of resources, until we then found out that Cushing, which is a very large reserve, is holding tanks for oil. Their stock's declining, so they haven't got a lot to release either. So they're the lowest they've been since August 2002. So they have a little bit of an issue. You can see that the world's gone slightly askew with oil and the demands and how it goes. And we won't actually forget the fact that a nuclear plant was targeted and fired upon by the Russians, and that didn't do justice to what was going on. But the final thing, and this is this big bar here as well, that had a big impact, is the Iran nuclear deal, which has a huge impact, because if that goes ahead, and as a lot of people thought that was going to be a slam dunk discussion, that would actually release a lot of oil back into the market and bring the price down. Why it didn't was because of, when you start reading the detail, and the devil's always in the detail, is there's a lot to it. It's got nothing to do with the way they run their nuclear plant or their oil production. It has everything to do with releasing political prisoners and a whole host of lots of details. So it's going to be hard for the Iranians to swallow, to get back into back into form on an economic level. So that's why we saw, bang, that sounded good. That sounded like it was a bit of a deal happening, and then somebody read the detail and it just sort of stopped. So this has been a week of just, if anything could happen, it did in oil. So a possible war in Libya, civil war in Libya. We've got Ukraine, Russian tensions still going. We've got Iranian nuclear deal. We've got pushing in a bit of a crisis, and we've still got, it's still a bit chilly up on the Northern Hemisphere as well, Geoff. So at the moment, we've got big bars, we've got big moves, we've got a lot happening. And if you look at it from the technical point of view, now just let's put the geopolitical and fundamentals aside, we've got an inside bar. But look at the size of this inside bar on that bar. It's just,
Sorry, I was talking. I said remarkably big inside bar. Yes,
they're huge. They're absolutely huge. So yeah, again, like gold, and these are the commodities that are really sensitive to any of the big stuff. And over the years I've said you've just got to be really careful with the fundamental and the news, because it will send it flying. And we've just got the perfect storm happening here. Which direction that's going in, I don't know. It's closed really neatly on R3. Oil doesn't normally get up that far, and that is a weekly pivot. Oh, look, having said that, there is nothing on the near-term agenda that would bring oil down.
Is that all-time high, eh?
On Thursday, it peaked at 100. It clipped 116, didn't get to 117. But I said the commentary at the moment is you get a war in Libya on top of everything else, because Libya is a big producer of oil. You get a civil war in Libya, and they're going to say it'll blink. It'll be at 120. Like I said, riding a bike and investing in an EV, an electric vehicle, we'll probably see, things that need batteries pop up. Hello, copper.
Bit of a push. Yep.
Push. Yeah. So the way oil is going, I mean, copper's just, again, have a look at the size of those bars, and it's a pretty wild ride at the moment as well. But yeah, you can see where it's going with oil. Just there's nothing in sight to say, well, okay, that'll take the heat out of the market or anything like that as far as prices go. Got a bit of a perfect storm to continue the push up. I personally would be waiting for, just go back to the chart, sorry, but you can see where other resources are being bought up, and other commodities and resources, whereas you look at that and for you, even you would say, oh, hello, that's a ranging market for the last week. When you look at that in isolation, but when you look at it comparatively to what happened to the last month, just crazy moves all over the place. So I've had a few heart-stopping moments this week, Geoff. I can tell you.
Well, I mean, they're so large because of the volatility. It makes it really, really difficult to see exactly where you can get yourself safe in the market. It stops it for long, That's the tough part.
Yeah, there's a weekly bar. That's a weekly bar. And it didn't didn't go from 92 up to 116. It's been all over the shop in between. So that gives you some idea of just the volatility, staying on top of the news, staying on top of what's coming through the news lines, and being safe. And with oil and with gold, if you're going to go in, wait for a retracement and set large stops, and get out at known levels. I'm finding getting on and riding and scaling is not working. It's not working well. It's not one of my strategies that I can do, basically because the volatility is making that restrictive. So just stay safe, boys and girls.
Yeah, look, not easy. It's not an easy market to trade, that's for sure.
Yeah, I mean, it sounds good in theory, and you look at a chart week in review. When you're in the middle of that, not so easy. Not so easy.
As I say, very, very difficult to gauge your risk at any given time. But yeah. We'll push on.